Welcome back everyone to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, what a statement of intent from the bulls as the Indian markets are seeing very strong gains, Santo, led by largely from buying by foreign investors at this point of time. I mean, if you look at the Nifty and Sensex, they look all set to end the day near the day's high with very strong gains. Some of the leaders of this rally: auto, IT stocks, FMCG stocks, and very interestingly, pharmaceutical stocks are the one who are topping the charts as far as the gainers are concerned. And even if you look at the breadth of this rally, the smaller mid-cap stocks are also participating today after a bit of a profit booking, if we may call that, over the past few sessions. If you look at today, smaller mid-cap stocks are on par, or if not outperforming the Nifty 50 at this point of time, Santo. And clearly, I think that risk appetite is almost, as if somebody said on Twitter that it's almost as if the Fed is going to cut rates by 75 basis points tomorrow, not raise them.
Well, when sectors which have so far not been performing in the rally and they too start joining, probably that's an indication that the party may be about to get over.
Oh, you just mentioned, always giving us the reality check. Come on, sometimes you should go with the emotions of the market.
You mentioned pharma out there. Well, that said, clearly the rally is being driven by renewed FI buying interest. But I just can't help feeling this way, CJ, that the market is still overlooking or just blindly ignoring the risk that are likely to come out of higher interest rates. What do you say to that?
I think Santo, probably a lot of it also probably has been factored into the fact that the fact that we hit almost 52-week low back in June. At that point of time, we were expecting a scenario where the Fed will continue to raise interest rates going into December and possibly into February as well. Back home as well, the RBI was expected to continue to raise rates, and it is most likely that it will continue to do that when it meets next. So in that sense, generally when you look at higher interest rate, you would want to now collate it with what is happening to earnings, right? And so far, we have not seen any evidence that earnings are being hampered by the actions of central banks around the world. And I think that is where a lot of the comfort for the market is coming in. Plus, on top of that, you have the fact that India is standing out as far as the macro economy is concerned, not only to its neighborhood, but to the larger Asian pack as well as the emerging market pack. So I think the buying from FIIs, I doubt that this is buying from active investors. This is buying because investors in their portfolios are just assigning a higher weight to Indian stocks, and because of that, you're seeing much more funds coming into the market than probably what was expected earlier. Remember, this is coming after almost 1.5 years worth of selling. So clearly, at one point of time, it had to stop, and this is the time.
Well, CJ, also, but don't forget the fact that in equities, if you need to make good returns over time, then you should probably be buying at the right price also, right? And I'm not sure if right now the frenzy...
Santo, if you look at it, I mean, if you zoom out, again, and this is the point that you and I have also made in the show in the past, if you zoom out, we're exactly where we were a year ago, right? In fact, a little lower, but we're exactly where we were a year ago. So clearly, the past 1 year, the market has just moved up and down, but really not gone anywhere. So there is what Marcellus called in its latest newsletter, the illusion of progress. It seems like the market is progressing, but it's actually not going anywhere. So in that sense, I think even bears will feel that really bulls have not really had it all their way.
Yes, we could say that. And with that, let's dive into the stocks for this afternoon. VRL Logistics, the first stock on our watch list now. CJ, the company has divested its passenger bus services in a slump sale for about 230 crore rupees, and that is being taken as a big positive. Also, VRL Logistics has been one of the best performing stocks in the logistics sector this year, and what most brokerages and even the market people feel is that now, having divested the passenger bus service business, which was not really making money, and in fact it was a drag on profitability.
It was a non-core activity actually.
Actually, yeah. So now this allows VRL now to become a pure play goods transportation company, and which means that it could give it higher valuations. According to Edelweiss, valuations are still pretty reasonable at about 18 times FY24 earnings, and besides that, it's got a good ROCE of about 35%, which is pretty good for a logistics company. So all said, this stock seems to be poised for better days ahead.
Well, Santo, clearly things are looking good as far as capital allocation strategy is concerned, because the company is clearly now trying to listen to investors and do what is the right thing. You know, if you remember a couple of years ago, there were reports that a promoter wanted to get into the airline business out
To
of
be
the
fair,
blue.
it was a, it was a personal venture. It was not using
Yes,
the
either
company
way,
funds
but
for
I
that.
think yes, exactly, and even though even still, the market read it in a very in a
Negative
very
way. Yes, I
negative way,
remember the big, huge
and
sell-off in the stock.
exactly. So clearly, I think this news has clearly come out as something of a relief for the market. But in general, I think if I were to look at the logistics space, Santo, I think more than VRL, I would rather bet on delivery, because that is
That's your
where I
favorite
feel
hobby horse,
that is
CJ.
where I feel that most of the growth is there, especially because of the leadership in the e-commerce space. So I think yes, VR is doing quite well, and perhaps there is more upside to be had. But if I'm looking for absolute returns, then probably delivery would be my the place to be for me. One stock on my radar today from the automobile space is Tata Motors. The stock really surged quite truly today, and that is largely because bears on the counter were forced to cover their short positions. If you look at the September futures, the open interest had actually fallen by almost 2.5 to 3% today, while the price has rallied, which clearly shows that bears were covering their short positions on the stock. And I think this comes on the back of the management's commentary to Motilal Oswal Financial Services at their ongoing investor conference, where Tata Motors surprisingly, or not so surprisingly actually, has reiterated its target or ambition to become a net debt zero, at least as far as the automotive segment is concerned, Santo, in FY24. Now that is just down the road. So clearly the management knows something that the market does not, and that has
Management
given.
always knows something which the
Absolutely,
market doesn't,
absolutely,
CJ.
absolutely,
That
and
that is a
maybe
truism.
they're seeing something that probably market at this point of time was not willing to see, and clearly investors have reacted quite positively to that. Apart from that, of course, as far as JLR is concerned, that has been the one major pain point for Tata Motors. There also the management indicated that demand conditions remain quite strong. All that they need to do is just get that production part of it ramping up, and they are, although seeing some bit of challenges, but in the longer term they are expecting that supply semiconductor issue that had plagued JLR for the past 1.5 years, that is going to ease out, and therefore contribute to not only strong revenue growth, but as well as improvement in profitability as well.
Well, my argument against Tata Motors has been this simple, that for many quarters now the company is yet to turn profits despite the impressive growth in top line. That's been a big concern. The company has not really been making money in that sense. Secondly, with the slowdown in US and Europe, now China also, pretty much now very obvious, that's not good news at all for JLR sales, I would say.
I think,
CJ.
Santo, I take your point on US and Europe, but China, I think, could be the turnaround story, because even today there have been media reports coming out that the government has announced a new package of more than in excess of $200 billion to support the economy, especially on the infrastructure side. And also recently, if you look at the August car sales data, that saw almost 30% jump on a year-on-year basis. And remind you, for China, the year-ago base is not really weak, because they were at that point of time doing relatively better on the COVID front compared to the rest of the world. So clearly, there are good signs, initial signs, that recovery is happening in the passenger car market in China.
Well, China calls for a separate debate altogether. CJ,
True,
if you read the commentary by some of the China trackers, very clearly they are saying that this is not something that can be just.
They are dismayed. Yeah.
Yeah, this is not something that can just be fixed by pumping in more money, because right now demand seems to be the bigger problem, and just giving more money in the hands of corporates or banks really won't solve the problem at this point in time. But that said, CJ, I think the commercial vehicle side, with the domestic side of the business, is looking good.
Yes.
But one of the two engines always sputter. Earlier it used to be the
hopefully very soon
domestic
both
engine,
those engines
and
will be firing.
earlier it was the domestic engine which was not doing well, and the overseas, that is the JLR part of the business, which was doing well, and now it seems to be a case of role reversal there, CJ.
At this point of time, yes.
Yes. Next stock on my watch list is M&M Financial. Now, key things in favor of the stock: the asset quality appears to be in a much better shape after the company undertook accelerated write-offs over the past couple of quarters. That aside, some of the key triggers, according to Sher Khan, is branch expansion and incremental volumes coming through its new offerings, which is SME and loan against property. Besides that, it's also been trying to improve its market share in the farm equipment segment. CJ, if you notice, the first quarter numbers were much better than what market was expecting. Disbursement also went up pretty well, showing strong demand at the ground level. So these are some of the factors. Although stock price has not shown much of a reaction, but it's consolidating after a strong run up seen between March and July, and probably you could see that uptrend resuming.
I think, Santo, one of the reasons why the stock is probably not behaved as much as well as probably people would have expected after the first quarter. The improvements that we have seen, tangible improvements we have seen in the first quarter, is likely because NBFCs at this point of time are just not that much in demand. It's all about the banking space at this point of time. Within the financial services industry, banking stocks are basically single-handedly concentrating all of the incremental capital that is coming in to the market, and therefore I'm not surprised that NBFC like M&M Financial is not getting that much attention. If you look at what Macquarie also had to say today, they are saying that with this, aside from Bajaj Finance, investors are not really interested in the NBFC story at this point of time, which is also probably part of the natural course, because you are in a new credit offtake cycle, and initially you would expect that banks would be the one who would be the dominant player, and then in the second leg you could see NBFCs come into it, and that probably could be another 12 months away, 18 months away. We don't know that, but that is something, how the cycle usually evolves. Apart from that, coming back to M&M Financial specifically, I think there has been an acknowledgement from the group as well that their NPA assets are too volatile for anybody's good, right, or for their own good. I mean, one quarter you see a good improvement, another quarter there a new surprise comes. And I think Anish Shah, who was speaking at Motilal Oswal Financial investor conference, he also suggested that they are trying to look into that. They're trying to smoothen out the volatility that they are seeing in their bad loan asset, and probably hopefully gather more investors, get in more customers, and expand their branch network so that the company performs well. But at this point of time, I think the confidence in the market seems a little shaky as far as M&M Financial is concerned. Well, the next stock on my radar today is from the sugar industry, and this is Dhampur Sugar. The reason it came into my radar today is largely because the promoters of the company have actually increased their stake in the company through buying shares in the open market, which is a really good show of faith as far as the promoters are concerned. And this buying also happens to come, Santo, ahead of the possible revision in the ethanol procurement prices going ahead. The market is expecting a bump up in the ethanol procurement prices from the government, which will be applicable from December onwards, and that is a very, very good news as far as realizations are concerned for sugar companies like Dhampur. Remember, Dhampur has been participating in the sugar rally largely because the story now is that ethanol consumption is going to rise from oil marketing companies, and that is why the sector has seen a lot of good days recently. Apart from that, of course, if you look at the financials of the company, yes, maybe in the long term it may not look that pretty, but in recent quarters there have been considerable improvement, and that is what a market would be betting on, that sequentially the earnings will keep on improving into FY24.
Well, my only quibble here, if I can say that, is that just look at the top line of the company over the years. It's just again not gone anywhere at all. In fact, it's less than what the company had clocked in March of 2011. The second part is that ethanol now seems to be the bigger story than sugar itself,
yes.
right? But does it really play out that way? If that was indeed the case, then you should have seen a tearing rally in almost all sugar
I think
stocks.
we had, in the tail end of last year and the beginning of this year, we did have a very strong rally, Santo. But then I think the past 3 months has been more about consolidation.
No, more than consolidation, it is concerned that once the government started stepping in and trying to tame inflation by first going after steel companies, then after the oil refining companies, that is where I think market got a little jittery, and that's where you saw the sell-off coming in sugar stocks. And since then, it's not really recovered there, CJ.
Yeah.
And if you look particularly in the case of Dhampur Sugar, there's been a massive price destruction after the June quarter numbers were announced, despite the fact, between April and May, and the stock has never really recovered from that, even though you saw a slight improvement in the June quarter numbers. So maybe market is sensing something which probably, at least some people in the know something which the others don't.
And I think keeping that context in mind, Santo, I think it's even more impressive that the promoter has gone out and bought the stock, so clearly suggesting to the market that this is not the value that the market should be affording to a story like Dhampur. And we will have to wait and see whether it turns out to be the right card played by the promoter or not. But at this point of time, clearly the stock is enjoying a very good rally.
Well, that much I will take, because promoter buying is seen as a better indicator than promoter selling.
Probably, yes.
Canfin Homes is the last stock on our watch list this afternoon. The stock has taken a beating in the last couple of trading sessions after MD and CEO Girish Kousgi has suddenly tendered his resignation, citing personal reasons. Now, The stock had seen a similar sell-off sometime in May also, when there were news reports of about frauds in 37 accounts of Canfin, and with this there were media reports about the RBI and NHB conducting audits into it, which was denied by the company. The full picture out there is still not known, but Mr. Kosgei still had 2 more years to serve, and his abrupt resignation, and he's been credited with most of the things that have gone right with Canfin Homes over the past couple of years. So his departure at this point is some kind of an overhang on the stock. But that said, CJ, there's been consistent improvement in the financials of the company, and I think that should continue going forward, although there will be some uncertainty in the interim, which is always natural whenever there's a change of guard. We saw that in the case of Jubilant also. But given that the company is in good shape, attracting talent to fill in that position should not really be a problem. And I think this is a temporary blip. The stock had made a strong comeback after the sell-off in May, and I think it can do that once again also.
Well, Santo, yeah, I mean, from a short-term perspective, it clearly does not look like a pretty picture. I mean, the fact that the announcement came so suddenly was a bit of a shocker to the system, and we have seen a very knee-jerk reaction in the stock in the past 2 trading sessions. And now clearly the resumption of any sort of rally will depend on the profile of the new CEO, whether they promote somebody internally, whether they bring in somebody from outside. Let's not forget that Canfin has a PSU promoter in Canara Bank, so it will be very interesting to see how that plays out. Yes, Kosgei was very important to, the way Canfin has performed over the past two years. Even, the fact that there was a COVID, their asset quality had actually not deteriorated that much, and they were enjoying quite many good days because of the revival that we have seen in housing loans or home loans in the Indian economy. But Jeffries has said that the uncertainty level will remain high till the time the new, this management picture clears out, and that could be anywhere between 10 days to 40 days to 2 months. We do not know at this point of time, but clearly in the short term, even some technical analysts have suggested that any rally in the stock could be utilized to book some profits if you have made any over the past couple of months.
Well, with that, let's take a quick look at the market. Index still up close to about 1%. It has slipped slightly from the day's high, but all set to close on a very firm note.
And Santo, mid-cap's clearly doing quite well at this point of time. If you look at the Nifty mid-cap 100 index, I think more than 1.7%, about 1.4% gains, while the small-cap index, I think, is higher in the same range, about 1.1 to 1.2%. If you look at some of the top gainers, Santo, very interesting to look at the top gainers today. Apollo Hospital higher by 6% on the Nifty, Cipla, Sun Pharma, Eicher Motors and IndusInd Bank finally rounding up the top 5 to 6 gainers. Whereas the losers of the day today is Nestle India. Nestle India, Shree Cement, Grasim, Power Grid are some of the top losers as far as the Nifty is concerned. So clearly, overall, it has been a very, very strong day for the bulls, and long may it continue.
Well, CJ, so what are the things that we need to keep an eye out for? Clearly, the market is behaving as if, as you mentioned at the start, that there is probably a rate cut coming.
Yeah, I mean, Santo, I think we will have to turn our attention to the US, clearly with the housing starts and building permits data coming out later in the evening for the month of August. That is something that the market will be watching out for. Apart from that, yes, tomorrow is the big day. The US Federal Reserve's monetary policy outcome will come out tomorrow. So our markets will eventually be reacting on Thursday morning. But yes, tomorrow you could expect a lot of volatility. I would not be expecting too many positions to be taken tomorrow, given that such a major event, ahead of such a major event, you do see some bit of tentativeness from the investors. Very interestingly today, Santo, it's the India VIX is what is it, very interesting story, because the volatility index has fallen by 5%. So clearly, it seems like bears have chickened out just ahead of the main event.
Or bulls are now fully confident that this all set to, as you said, probably a rate cut coming more than a rate
And this
hike.
is in line with what you were saying in the morning, Santo, that because of the high short positions, there was a possibility of a short squeeze in the market. And a move like today's, where you're higher by almost 1.5%, this generally tends to happen when there is a squeeze in the market. This is not just, cash market delivery based buying that is happening in the market. This is largely a very short position driven market at this point of time.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do post your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again tomorrow morning at 9 a.m. Till then, have a great day.